right. Good morning, everyone. Today was coming to you guys with another weekend market review. And this morning, I'm going to start off by taking a look at the SPXA 200R, which is a tool that tracks a percentage of stocks trading above that 200-day moving average. Today is Saturday, March the 3rd. It's just about close to 6 a.m. when I'm recording this recording. I'm sorry, today is not Saturday. Forgive me, today is Sunday. I'm a day behind. Today is Sunday, March the 3rd, 2024. Again, today is Sunday, March the 3rd, 2024, when I'm recording this, and it is close to 6 a.m. on Sunday morning. All right, so again, start off with this tool. I'm going to point out some levels that I've been watching for well over a year now. So interesting enough, and we're hovering around a strong area of resistance, as we can see. Every time we get around this area, we start to consolidate or pull back. So, as you can see, we either consolidate, pull a bit, and then pull back, or just hit that point and just pull straight back. Again, here, hit that point and pull straight back. Again, here, hit that point and pull straight back. Here, consolidate a little bit, pull back right to this moving average, and just been consolidating just below this area now. We've just been consolidating just below this area. With the RSI reaching an overbought territory at one point and then pulling out of the area and then not creating new highs, just hanging there. If I was Batman, I would say eventually this consolidation will give way. It's a matter of time. And I do think we could, again, I still think the overall momentum of the market could still shift towards the downside. So keep that in mind. This ceiling up here has been very, very hard to break, as you can see. You count them. 1, 2, 3, 4, 5. So 5 times we have tested that area. That's right around 80%, at the 80% level of stocks trading about the 200-day moving average. We've been testing that level since since 2021. It's like the first time was back here around October 2021. Every time we got to that level, we've not been able to break above it, but show some kind of a pullback eventually. And this is the longest consolidation pattern we've had. This is a weekly chart too, folks, by the way. It's a weekly chart. So this is not a lot of noise. This is a weekly chart, I believe, that, a lot stronger than that. I mean, gives you a lot more confirmation than the shorter term chart, such as the daily and hourlies. So we've been consolidating in this level, this weekly chart, for multiple weeks in a row. And when we hit that level, we pull back. Then we just consolidating. 1, 2, each one of these candles represent a week. 3, 4, 5, 6, 7 weeks in a row. Markets have just been in this range. It's been consolidating in this range seven weeks in a row. A lot of folks think we just been up and away, but we really haven't. We've just been consolidating in a range for 7 weeks in a row. All right, so that's what the overall momentum. That's what the overall momentum of the breadth of the market looks like. So we've just been consolidating several weeks in a row. So how will that pan out? Time will tell. Time will tell. But overall sentiment is like we've been in a stalling pattern for quite a bit, and it could possibly be ready to reveal itself soon. So pay close attention to where price action in the market is. Pay close attention to this percentage tool, because this is a good indication of the overall breadth and direction of the overall market. We got a quick daily chart. As you can see, even here in daily chart, you see how tight this range is, and how tight this range has been. So this has been a tight range for several weeks, multiple weeks. So eventually it's going to give way, folks. And if I was a bet man, I just say we're going to end up testing the bottom of this range. Just my ultimate, that's my personal opinion. So this consolidation pattern continues. And again, we've been consolidating in this range, overall sentiment range, for about 7 weeks. All right, let's take a look at the overall markets themselves, starting with the SPX, S&P 500. And one thing I want to point out, just by looking at this daily chart, look at the RSI at the bottom. We just been tagging overbought territory for quite a bit. But what I want to point out is that RSI got as high as 90. It was back in December. And since then, RSI has been creating these lower highs. As you can see, this trend line I just drew, low highs. Every time we bump into that overbought territory, we pull back, bump to the overbought territory, pull back, and not create new highs. Just continue creating these lower highs. And so as the price, as overall price has been climbing in a nice climb higher, RSI has been showing a trend, has been showing a lower trending pattern. It's in a downward trending pattern. See the divergence. All right, price action been going up consistently. RSI has been not creating new highs, but it's been creating higher lows. Not higher highs, but higher lows, as you can see down here at the bottom, where the RSI is. Peaked out at about 90%, then trended down, tried to re-engage this 90% level, peaked out right here, and tried to retake that level again, peaked out right here. Now it's making an attempt to challenge that trend line again, with price action reaching as high as 51.40 as of Friday. So just above a level of resistance. Do we continue to run higher here, or do we pull back here higher? If I was a bet man, I would say that we could possibly see some type of pullback here. And then eventually, I think the consolidation, folks, I think this grinding higher, that the market has been seeing could be possibly about to come to a stall. Clear that. So let's look at the daily chart, and let's switch to a weekly chart of the S&P 500. All right. So on the weekly chart, I'll first bring your attention to the RSI. So the weekly chart RSI is as high as it's been in well over a year. Weekly chart, the RSI reading now is right around 85. So again, once you hit above 70, that's considered overbought territory. We are deep into overbought territory on the weekly chart. So that should be reason for caution that we are deeply overbought in the RSI by looking at the weekly chart. Weekly chart is deeply overbought. So on the weekly chart and the daily chart shows overbought territory, and the weekly chart showing severely overbought territory. It also gives me reason for caution. Okay, we are definitely in overbought territory, with the market just been trending straight up and hitting a Fibonacci retracement level of resistance. So it's definitely reason to be a little cautious in overbought territory. So deep in overbought territory on the weekly chart. All right, that is the S&P 500. Let's take a look at the Dow Jones. All right, Dow Jones Industrial Average, same scenario. In overbought territory on the weekly chart, showing a RSI reading of 84. If we look at a daily chart, one thing I'll point out on the daily chart is you see price action been trying to trickle higher, but I want to point this out because this also, it could be another telltale signal that we could be trending lower. So look at the price action that we've just been consolidating up here at these highs on the daily chart. Look at the volume. Strong volume on last week, but 2 days in a row, volume has been dropping. See the volume bars is starting to drop. Price action just trending lower and, pretty much in the range. So I think eventually this is going to give, folks. Wait and see if it happens next week. It hasn't done it yet in a couple weeks in a row, but no big moves higher either. So it's a consolidation pattern. So it's a consolidation pattern just about up. We're going to find out very soon. So back to our weekly chart again. Look at that pattern. We've just been consolidating for the past several weeks. And we are in overbought territory in the weekly chart. And again, a reading of about 84 on RSI. That's the Dow Jones. Take a look at our NASDAQ. Again, NASDAQ also in overbought territory. RSI reading up just about 78. This is a weekly chart. And just above the 16,000 level. We're at 16,200 now. So we at 16,274. We reached 16,300. So we definitely in overbought territory there. Let me glance at a monthly chart real quick. Monthly chart also shows overbought territory. But what I want to point out here in a monthly chart as well, this is also just caught my eye, is that we have breached all-time highs. So we have breached the level that we were at when we started to pull back in 2020. Look at the RSI though. So the RSI, even from if we dating all the way back here to on a monthly chart back to 2018. So Mark's been definitely trying to creep higher, and the longer term picture of RSI since 2018. RSI has been trending. It's been trending low every time we get overbought territory. When he hit a level on RSI, can come right back down. So we have not been able to get breach the highest level we're seeing, which is back in 2018, when RSI was around 94. And every time we got back in overbought territory, we have not been able to breach that 94 level before we see some type of significant reversal back in, here we go, 2021. Back in 2021, RSI got as high as 85 and then started to see a pullback. And here we are now, 2024, RSI reading of around 70. This is on a monthly chart, around 76. I'm not creating new highs like we, like the market would want to see for a strong longer-term momentum higher, not creating new highs. So, and we're definitely showing an overbought territory even on a monthly chart. So did we pull back from here? We have to wait and see. I think we're getting close to that decision. Go back to the weekly chart. All right. So again, RSI on the NASDAQ definitely showing an overbought territory on the weekly chart. Price action just above 16,000. We're at 16,274. Do we march higher from here? Gotta wait and see. I'm in a doubting camp that we don't see much higher than this. Maybe retest that 16,300. And we gotta wait and see what happens. Let's go to a daily chart real quick. Here's our daily chart. Again, momentum is still showing in favor of the bulls for now, but we are definitely tapping like we are like at this If I can say, we at the skyscraper and just looking over top, trying to see which way we're going to go now. I think we're going to start to stall out here soon, folks. That's just my personal opinion. All right, that's the NASDAQ composite. Let's take a look at our Russell. Now, out of all the ones that looks like it could have some momentum, the Russell is the one. But I think once the overall markets start to stall, I think the Russell will eventually do so as well. Now, I'll point out something on the weekly chart of the Russell. The Russell is the only one that has not really made it up to all-time highs, which is around this 2,458, and just don't think it's going. Don't think it got enough juice to get there right here, right now. Now we have the Russell did manage to break out of this tight range that it is break out above this level of resistance that it's been struggling with since the middle of 2022, which has been at 2,000 levels. So Russell finally broke above that 2,000 level with a strong green candle on last week. Now let's see how this play out this week. Can it hold that? And that one ultimate what I'll be paying close attention to on next week, what I'll be looking for is by the end of the week, can the Russell hold above that 2,000 level? It's got a big green candle last week, but do we hold above the 2,000 level? If the Russell can hold above that 2,000 level by Friday, by the end of trading on next Friday, then it could, signal more higher highs on the horizon. If the Russell cannot hold above this level by the next Friday, then that could be signs that overall market could be in some trouble. So we have to see how that pans out next week. All right. All right, so we glanced at all the markers. We took a look at the overall momentum by looking at the SPX 200R, and we glanced at all the major indices, indices, daily and weekly charts. Let's take a quick glance at the VIX. All right, and with the VIX still nice gap. Let's notice this too. There's a gap up in the VIX right here, which has not been filled yet. So when we gap, we're gapped down. So we gapped up here. Draw some lines here. So there was a gap up in the VIX right there. That was back around second or third week in February. And then we managed to gap back down right here to fill that gap. There's a gap there now. It was between the end of around close to the end of February. And we have not been back up to revisit this gap just yet. So there's an open gap there, folks. 9 times out of 10, we see gaps on the VIX, they always fill. So could we be in a process of about to reverse to come fill this gap? That we'll have to wait and see. We're just trading just above that this particular trend line here, which is just below 13. So could we see the VIX pull back to 13? That's a possibility. We could see a little bit more down from the VIX to 13. If we do see that, then I would expect a major reversal. So anytime between now and here where we're at now, we could see the VIX either pull back or the VIX just not pull back, just take off from where it is now. But I think the VIX will eventually attempt to fill this gap up here. So let's look at the VIX on a daily chart. It's a weekly chart of the VIX. And as you can see, right around a level of resistance. So just around that 13-hour level. So anywhere between that 12 and 13-hour level has been a strong average support. So we are hovering just back above that level now. And when we get back down to this level, normally the VIX finds a way to consolidate or finds a way to just take off and go right back up. So VIX is in the area, folks, that it could see a mass reversal back to the upside. So pay close attention to that as well. All right, now let's take a look at something very, very interesting. from a bullish standpoint is gold, folks. You pay attention to gold. So it has been knocking on the door of a potential breakout above that 2100 level. And unlike what I just pointed out on the decrease in volume in a sideways action on the way up, the gold shows a different pattern on the weekly chart. So it's been consolidating around this level, and then it's starting to show some upward momentum. I like to see follow through. So when there's a green week, I like to see follow through. So we got 2 green weeks in a row now. So weekly chart 1, 2, and look at the volume increasing on the way up. So that's what you want to see in a positive flow of momentum to the upside. So could this continue? That's a possibility. We have 2 green weeks in a row with volume trending higher along with price action. That's what you like to see when you see when you're looking for a continuation to the upside. So could we be about to break above this 2100 level, $2,100 level to go and retest at 2152? That is a huge possibility for gold. So pay close attention to that as we trade through next week. Take a look at a daily chart of gold. It's a daily chart. RSI just breaching that overbought territory right around 80, above 70, and we're above 80. So could this continue? This could continue for a little bit. It's a possibility. We're gonna wait and see how that pans out. That 2152 level is the level to watch for possible break. If we get that 2152, that is going to act as a level of resistance. So we could see a pullback if we rally up to that point. But I think the overall momentum and overall direction is trending higher in gold. So I think silver also is going to show you the same scenario. There's silver. And if any one of these has a better potential to show a bigger breakout, I think it would have to be silver, because RSI on silver is only showing at 63. So it's just beginning. So silver has a lot of space up here to run, in order to retest that $26 level that it hit back in December of last year. Hit that $26 level, got a huge reversal. It's a lot of space for silver to run. So I think silver could be could possibly outpace gold as a percentage level, with RSI still below 70 on the daily chart. Here is a weekly chart of silver. So you can see its consolidation pattern right here, and it really has not really taken off in a big way to the upside. And I think it could be in store for such a move. Give me 1 second, folks. So pay close attention to silver and gold as we trade through the rest. I'll say the rest of the next couple of months. We could see some momentum build up there, and reverse back to the upside, the silver and gold in a major way. All right. Take a look at gold. Then I'm gonna take a look at some individual stocks. I'm sorry, not gold. Take a look at crude oil. All right, folks. I've been banging the table. This inflation story, folks, I think is what could derail markets. And if we definitely start to see continued higher prices in oil, I think that's going to help derail markets. So keep that in mind. Oil has been trading below this $80 level for quite a bit, and I've been pointing to showing folks the base that oil has been building for potential reversal to the upside. So it's building a strong base. When we came back down, pulled back to this level, creating a strong base just above 70, consolidating above 70 for several weeks, and then we started to show some volatility, was a possible movement to the upside, and now it's like that movement is starting to be steady. Okay, so we could be in a trending channel higher. We're hovering just below 80. I think we did breach 80 at one point, But again, I think we eventually going to breach above 80 for some personal opinion. I think we're going to breach above 80 and continue this channel higher. That's my personal opinion. Now, I do think there's a lot of resistance up here. It's right around 90. So when we reach up there around 90, that could, we could run into some resistance, but I do think there's a pathway to 90 at this point, folks. That's a pathway. The overall channel, upward channel, is showing that this is we've been building up this consolidating below this 80, between 70 and 80 for quite a bit, and I think we are now formed a solid base around a support of between 70 and 80, and I think it's starting to trend higher in a trending channel. So we have to see if that continues on next week. Again, but I do think crude oil is in a channel that it could be in a bullish channel higher. It's starting to break out above the long-term consolidation pattern. Let's look at silver. I'm sorry, let's look at crude oil. Crude oil on the weekly chart. Let's take a glance at crude oil on a daily chart, and what you'll see here is, here's our daily chart, and you see potential breakout to the upside happening even on daily chart. So you see the resistance level right here, right on 82. If we break above 82, then I think 85 is definitely in the cards, and it could happen quickly. RSI on the daily chart is showing just below 70, so it does still has room to break out in overbought territory. That could happen real quick next week, so pay close attention to that. And with that said, a couple of stocks we'll take a look at. I want to take a look at a couple in particular, especially within the oil services sector. Occidental Petroleum. That's one that I've been paying attention to because it's something also that Warren Buffett has been really loading up on over the past year or two. And I heard recently that he may have added more to that particular stock in his portfolio. Like some of these oil stocks, folks, I think they've also been doing something that oil has done too. Oil services has been done too. It's been they consolidated at a level with Occidental. It was in this downward trend, and then all of a sudden it got down to about just below around 55, 50, between that 55, 57 level. Got a little bounce, but came back down, did a double tap, and actually a triple tap right back down to that around at 55. And then a big push up right after the reported earnings. And look what it's done since then, since that report of earnings, since February. Sort of a bull flag got formed here. And I think this is just a channel that's starting to stand firm, and we could see a higher breakout above the 62.50 level, which is what I believe we'll be going to see. And Occidental eventually going to break above that 62.50 level, then I think it'll be off to the races. This is something that I have been holding for quite a bit. I'm waiting for this breakout. Look at a weekly chart of Occidental Petroleum. And this is another thing that really had my taste buds salivating, is that this is a trend that we've that it's been in for quite a while. So it pretty much had a massive run back in 2022, somewhere around 2022. It had a massive breakout after reported earnings, and it does that from time to time. Massive breakout here, this big green candle, and then it was like a trend higher before reversing. And reversing back to this into this area, and I'll highlight this with the marker here. Reverse back and started to consolidate. It started this consolidation pattern on this longer term triangle. So it's just been consolidating. It broke above this level here back in 2022, did not revisit it. So that leads me to believe that, it created a level for higher highs. found a base, found a support level above this breakout, and it's been tagging the support level above that breakout for a long time. For a long time, not breaking below and creating lower lows, which is a good bullish signal. But it got it to as high as 77. Then it started creating these lower highs, but no lower lows. So that means it's being pushed. The price action being pushed into a corner by not creating any higher highs, but not creating lower lows, pushing it into a corner. Are we about to break out of this triangle? I think so. I really, really think so. So I am heavy on Occidental right now. And look at the RSI. It's just been trending higher now, starting to trend higher as it's been consolidating in this trading range for a bit. The RSI has been trending higher. So eventually, price action will probably meet with RSI. We'll probably see this breakout here in Occidental. So that's something I want to point out. Occidental Petroleum in the oil sector, and I always showed you what happened with the oil market. If Occidental breaks about at 62.50 level, it could be on a tear to come back and probably try to challenge the $77 level. That's Occidental Petroleum. All right, another one we'll take a look at is let's see, another one in the oil sector, CVE is another one that I've been trading in. Actually, I own some CVE, so same type scenario. Had this strong breakout from 2021 up until middle of 2022, and got a reversal, but not back down to the lows we broke out from. Just to half of this rally, pretty much half of that rally from here around August of 2021 to here, got it to 24. So back here in August 21, it was around $8 a share. Rallied up to about 24, came back and started to consolidate above 15. So that 15 level became a strong level of support. And now it's like it's ready to bounce from around that level and possibly head back up to challenge at 24 high. So that's a possibility for CPE. There's a daily chart of CPE. As you can see, got that bounce from around the $15 level, and now the trend has reversed. It is in an upward trending pattern. One more oil services sector stock I'll take a look at is RIG. RIG. This is a daily chart of RIG. And like it found some support around 445. It is now trading at $5 with a big breakout last week. Was up 8% on Friday, and I do think this momentum could continue. Longer term could continue with some pullback here and there, but definitely I think it's ready to turn the corner. That is RIG. It's a weekly chart of RIG. See how it's been oversold for quite a bit. And then we're getting this in RSI showing oversold quite a bit. And then we just big reversal in RSI on last week. Big green candle. I think eventually it will break back above this 10-period moving average and start to trend higher. So that is RIG. Something to consider. All right. Taking a look at a gold stock, GDX, which is the gold miner ETF. I think if gold starts to show off, I think GDX or these gold miners will start to really ramp up. Here's a weekly chart of GDX. You see the RSI at the bottom, like it's bouncing from the oversold territory, like it's ready to turn up. That is the weekly chart of GDX. It's a daily chart of GDX. Finally broke back above its 10-period moving average. Has been consolidated, has been hanging down below that level for quite a bit. It's finally got that green candle above it on a daily chart. So I think this is a move that could continue. And that is GDX. One more in the gold sector, which is Newmont Mining. It's been beat up for quite a bit. And I think Newmont Mining possibly finally got a reversal right here at this $29 level, right above, right around 30. Like it possibly got a reversal, gapped up, and I think it could possibly hold this level above 31 for continuation higher. RSI is starting to trend higher as well. That's a daily chart, Newmont Mining. And here's a weekly chart of Newmont Mining, still showing in oversold territory, but I do think it may be in store for a reversal right here, right now, very soon. And one more we'll take a look at that looks kind of interesting. Oracle, and this one got to wait on too, because with the overall market shifting lower, this could be a fake out, but Oracle looks like it's been hovering just above this level for quite some bit, above this 112 level. Could it be ready to break out above this level? It's a possibility. It has earnings coming up, so anything can happen. If it can reverse to the downside, or it can break out above this level. There's just been a lot of option activity, a lot of call option activity showing in Oracle. So pay close attention to this one. It could be in store for a breakout. Here's a daily chart. Shows a strong day on Friday. Strong green candle with price action starting to hover above this 10-period moving average. Could it break out to the upside? Is a possibility. So I just wanted to point that one out as well. Anything else look interesting I saw in this past week? Bosch Health was another one that shows some breakout. Now this one is in overbought territory already on the daily chart, but it's showing some strong momentum to the upside. Here's a weekly chart. Like this move is just getting started. So could we see a pullback here soon? That's a possibility, but I think longer term, I think this one may be a good pickup. I think that's all I wanted to point out for now. One more, MARA, folks. That is the MARA, Mara, very volatile stock that is a holding that follows the crypto and Bitcoin, things of that nature. Well, I think Bitcoin is definitely in breakout mode, and I think it could breach all-time highs. Some of these stocks, ETFs that's within that you can actually trade, have been showing some movement as well. That moves right along with the crypto market. Mara is one of them. It's been it's been very volatile, but every time it has these volatile moves down, and it has a volatile move down, it always has a volatile move. It's been having a volatile move back up, and it's been bouncing consistently off of this 20. It's a 10-period moving average that I use. So after this big rally up, came right back down to it, and like it's starting to move right back high again, and it reached that previous high. I think eventually Mara could see a big move above $35, folks. So that's something to pay close attention to. Like I said, this weekly chart looks like it has a lot of space overhead if Bitcoin, if this Bitcoin crypto rally continues. Mara could benefit from it in a major way. Very volatile though. If you can't stomach, it's not something that you want to mess around with. But I like to point out this because Mara has started. It's attempting to break out above a major level, and I'm gonna point this out right here, right now. So look at this longer term trend line of Mara. So I wanted to point this out because it is threatening to break out above this level. So here's a trend line that Mara has visited before in the past. So at one point it was level of resistance on the left, and we failed and continued down. It was a level of support also in prior eras. So back in 2021, it was a level of support. We continued to bounce off this level, and then it went as high as $83. Then it reversed. back at the beginning, or towards the end of 2021, around the beginning of 2022. It consolidated right there at that level, and then we finally broke above it. Came back up to test it, could not break above that level, which is around $35, and reversed since then. Now right back tapping on that $35 level, trying to break above it. You see, we almost tapped it here, pulled back, only to pull back to the moving average, which is that's a good sign for the bulls. Consolidate it and pull back up. So now it looks like it's trying to test a breakout above that level again. Do we break above that level? That's a possibility. And if it does, folks, you see how volatile this stock is. This can really rip. So that's something to consider. All right, that's all the ones I wanted to point out to you folks. Hopefully this is information that you guys can use. Until the next video, Tim Davis for signing off, and enjoy your rest of the weekend, and happy and good luck trading on next week.